Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. A bullish white soldier yesterday, the longest we've had in about 2 weeks, and very close to a key reversal up, but still not quite. The oft-mentioned support of the combination of very slowly rising long moving average, currently at 108.32, highlighted in gold on my daily chart, and the mauve-coloured slowly rising medium moving average, currently 108.39, acted as a base for the action, as well as making a golden cross, if only just at the moment. The move up punched through the 50% Fibonacci line for 2023 at 108.64, and more importantly, the capping resistance of the short medium moving average, currently 108.71, highlighted in green on my daily chart. Prices went up into a quiet zone overhead that runs up until the broken green highlighted lower bull channel line, currently at 109.67, of the October 2023 to late January 2024 bull channel overhead. I'm still wondering if the market will rise enough to trawl along the underside of this lower bull channel line. It's also time to look once again below at the small, broken, mid-January to late February bearish expanding wedge pattern. The primary target for this pattern has already been achieved, but the secondary, hard to reach target X, is up in the 109.85 area. Well, that is still live. So far today, a slightly lower open with a small test higher, but seemingly not comfortable in moving that way if prices look interested in staying where they were. Cable, aka sterling against the US dollar. A fourth bullish white soldier yesterday with another highest high and high close since late January. It was also a continuation of the move higher from the bullish thrusting pattern seen last Friday. The base of the action was this time on the familiar resistance, now support, of the 50% Fibonacci line of the June 2016 to September 2022 move at 126.99. And prices rose as high as to approach the top side of the previously mentioned general congestion formed between December 2023 to January 2024, from the 126 area up to the 127.75 area. This overall general congestion has been the key overhead cap, pressing down on any attempts higher. Other than this, we have seemingly little in the way until the overhead dark blue middle time, currently 128.04, of the broken November to December 2023 shallowly bullish shift pitchfork, highlighted in dark blue on my daily chart. So far today, a higher open today, but no immediate attempt higher. Instead, a dip to the lesser Fibonacci line at 127.21, but also a subsequent pull back up. Euro sterling. A reactionary bullish white soldier yesterday after the previous session's second bearish black crow. It seems a combination of the December 2022 low at 85.45 and the December 2023 low, 2022 low, both in December. Well, the 2023 low nearby at 85.47 also turned back the market upwards. It seems the recent escape attempt over this 85.45 to 85.47 zone may not be as terminated as it first appeared. However, one should still be wary of the recently introduced overhead descending short medium moving average, currently at 85.74, capping the market. Overall, the prices are between the dark blue highlighted middle time below, currently 85.24, and the upper time above, currently 86.21, of the November to December 2023 bearish shift pitchfork. We're also still well within the breached, but not broken, small, purple highlighted generally rising late January 2024 to date expanding wedge pattern, currently 85.23 to 86.02, which obviously tempers to some degree the bearishness generated by the shift pitch fork. Further down, we have the bright red neckline, currently 84.97, of the May to August 2022 head and shoulders continuation pattern. This is noteworthy as it had successfully held up prices mid-February, whilst further overhead, well, we have three descending moving averages, nearest being the short medium moving average, which is impacting now, and the next being the now flatlining long moving average, currently at 86.08. So far today, well, a lower opening and a move down towards the 85.45 to 85.47 congestion, just piercing it, and looking right now as if it's moved from being a bearish harami to possibly a reactionary bearish harami to possibly a bearish double, but it's still early yet. US dollar against the Japanese yen. A second bearish black crow yesterday and a significant move down below last week's low. This is further evidence of the impact of last week's weekly key reversal down. Overall, prices are still settled within two major pitchfork patterns. We have the February 2022 to January 2023 bullish shift pitchfork highlighted in purple on my daily chart. We are in between the lower time below, currently at 143.77, and the middle time above, currently 157.85. We are additionally now in between the middle time above, currently at 151.84, and the lower time below, currently 144.56, of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. So far today, an impressive move lower with yet a further endorsement of last week's weekly key reversal down. Prices are now approaching below the combination of the flatlining medium moving average, currently 147.63, and the rising short medium moving average, currently 147.38. The next support below that is a combination of the lesser Fibonacci line at 146.33 and the rising long moving average, currently at 146.20. US dollar against the CNH, the offshore Chinese yuan. Another indecisive pattern yesterday, this time an indecisive doji cross. Overall, the market is still capped overhead by the slowly rising long moving average, currently at 722.56, and supported below by the declining medium moving average, currently 720.23, as it moves to meet the dark blue highlighted lower trend line, currently 720.01, of the mid-January to date ascending triangle pattern. Okay, so I know I've said this many times before, but I feel prompted again to repeat it here. We had an unusual situation in the Chinese yuan, not because of the lack of movement, but because 2 weeks ago we had a weekly key reversal up in the spot USD CNY, the onshore Chinese yuan, and at the same time we had a weekly key reversal down in the USD CNY, the onshore Chinese yuan again, but this time in the 1-year NDF. Seemingly we're undergoing some changes in the curve here, or there may be some strategic positioning taking place in the timeline. Finally, as I mentioned earlier, we are still within the dark blue highlighted mid-January to date ascending triangle pattern, currently 720.01 to 723.54. This pattern is getting closer to its termination in early April, so please pay special attention to it. So far today, a little lower and still getting close to the declining medium moving average and the lower trend line combination. US dollar against the Mexican peso. A bearish black crow yesterday, effectively the fifth in a row. Prices once again dipped below the highlighted in dark blue middle time, currently at 1692.12, of the December 2023 to January 2024 mildly bearish shift pitchfork, this time closing below it, as well as closing below the nearby support at 168897. This bearish pitchfork has accounted for in the past the best overhead resistance, with the upper time currently at 1725.43 being aided at the time by the adjacent declining long moving average, currently 1722.83, and the medium moving average, currently at 1722.54. I mention these two moving averages as they are making a dead cross on my daily chart as I speak. Going back a moment to the congestion at 168897, it was formed in mid-December 2015 and more recently featured in mid-August and late December last year. A little further below now, we have the neckline of the February to April 2021 head and shoulders top, currently at 1682.35, which has in recent times has acted as a shadow to the middle time in showing a bearish angle of attack. We also have the 2024 low at 1678.20. Meanwhile, overhead, we have a congestion band formed from the April 2016 low at 17.03.89 and the March 2016 low at 17.09.23, with a slowly declining short-medium moving average currently 17.04.62 within it. Overall, we are still well within the bearish shift pitchfork highlighted in dark blue. I've said this next bit before, and I'll say it again. One could argue the market has been utilized in the middle and upper tines of the bearish shift pitchfork as a de facto bear channel. And I go along with that argument. But the last two sessions have seen the first attempt below and out of this that we've seen since early February. So far today, a slow start capped by the congestion at 16.8897 so far.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.